the 3 CPA warnings every business owner should know about. Today, I'm going to talk about these 3 warnings that you should be looking out for. My name is Julian Gonzalez. I'm a CPA. I'm a co-founder here at Upfront CPA. And we are here so that you don't overpay taxes, and that we are here so that you run your business the smart way. So I've been in business as an accountant, as a CPA, as a tax advisor for over 20 years. And I really got down to 3 basic things you should know, okay? I've been serving all the way from big business, from hedge funds, private equity, investment accounting, to literally my neighbor down the street that is running a coin laundry business. And throughout all the years in servicing either or, I really got it down to a formula of 3 things. If any of these 3 things apply to you, you need a CPA, no doubt. Why? And this is key, okay? If you see that your CPA, if you see it as an expense, if it's costing you money, if at the end of the year you don't see a difference, then it's not about hiring a CPA. It's about possibly changing your CPA, okay? So the 3 warnings. Let's start with the first one. You're making too much money, but you know where it's going. What does that mean? You're creating revenue, you're having sales, your sales are increasing, but you don't see it at the end of the day. At the end of the year, you're overpaying taxes, you're actually scrambling to get money and pay your debts, including the IRS, which is a debt that you do not want to have, okay? So who does this apply to? Let's say you're a business, you're making, let's say, somewhere in around the 6 figures or more. Let's say you're a self-employed professional whose income it's increasing ever more. This is a huge flag. I mean, if you're increasing your sales, your profits should be increasing as well. But what is key here is that you hire the right CPA so that you do keep your hard-earned money and you're able to either invest it back into your business or you just go ahead and enjoy. Okay, it's always smart to put at least, maybe not do either or, maybe do a combination of both, but it's always smart to at least reinvest some of that money into your business. Okay, so let's say you're one of those businesses, right? If you're not keeping the right bookkeeping, if you're not planning your cash flow, or if you're not forecasting, at the end of the day, I guarantee you're paying too much in taxes, you're missing deductions, and you're heading for a cash crisis. I've seen it all over the place. I've seen it with big companies. I've seen it with my neighbor down the street running a coin laundry business that is a cash business where they run into cash issues. You do not want that, okay? A CPA is able to, or the right CPA is able to create the right forecast for you, to do the right planning through the year, first of all, so that you don't run out of cash, and number 2, so that you don't overpay taxes. That is the main priority of your CPA. How does that help you? Well, it helps you because obviously you're going to be able to run your business the right way, and you'll be able to save in taxes. The idea is that whatever you pay your CPA, you double that, triple that, tenfold, whatever the case, how good your CPA is, that you make that by not overpaying taxes. It's the number one thing I talk to my clients, right? When we talk about an engagement, when you talk about, okay, how much does it cost me, my CPA? It's not a cost. It's an investment. What it does cost you is not to hire the right person and you end up paying for a retainer, or worse, you don't do anything throughout the year, and then when it's time to file your taxes, guess what? You get that huge bill, number one, or you cut corners, you make up things, and then you're gonna get a nice letter from the IRS, and worse, because they're gonna be charging you penalties and they're gonna be charging you interest. So what a CPA does is they should be able to track your financial planning, okay? And they should be able to structure your business in a way that you're not overpaying taxes, you keep keep most of your hard-earned money, and you're able to meet your obligations as a business. Okay, so that's the big tax savings that you should be on the lookout for. Okay, so that's number one. Now let's do warning number two. You get a notice from the IRS, either an audit or a letter that you that you do not want and that you do not understand. Okay, and this is key. When it comes to IRS letters, what's key here is the IRS sometimes they like to play a bit of a cat and mouse game. And what that means is they might start off with a soft letter. They might start off with some kind of question about something about your business, or something that maybe you did not do right on your tax returns or throughout your business or with the state, whatever, or payroll, whatever the case may be. And that may lead into bigger problems. Here at Upfront CPA, the one thing we do is we cut the snake on the head. We do not let that escalate. I cannot tell you how many issues, how many clients we've had that have let the issue persist, or maybe their accountant did not have the right representation for them and was not able to help them by contacting the IRS. And what happens is a small problem, if not handled correctly, can easily turn into a huge problem. So if you're receiving a letter from the IRS, or if you selected for an audit or a review, that's a red flag. Okay, that means that the IRS has put their eye on you, and that means that you need to contact the right CPA so that they can handle this for you. So sometimes what happens is, and this is key for anyone out there that doesn't know, a CPA is not only able to provide all these tax planning and forecast and cash flow planning for you. They can also represent you before the IRS. As a CPA, you have the standard. You meet the standards to be able to call through. Obviously, you have to get a power of attorney, but with that, you don't have to handle that yourself. You hand that to your CPA. You did my you can tell you did my taxes. You do my bookkeeping. Go ahead and handle this letter. And the right CPA, what they're gonna do is they're gonna go right at it. They're gonna release a problem. They're gonna take care of it right away so that it doesn't escalate into bigger problems. So ignoring the IRS, it's a red flag. It's huge. It's gonna create more problems for you. It's gonna lead you to penalties, to interest, and it could be a bunch of. It could be many reasons. It could even maybe be a mistake from the IRS. But the key here is that your CPA, that you have the right CPA, that they can contact the IRS right away and handle that for you. Okay, so that's number two. Now let's jump into the number three warning, the third warning that you need a CPA right now, and that's you're making financial decisions without tax planning. So this is key. This is what our Upfront CPA we focus on. The only way that we as CPA can provide you value is this thing called tax planning or tax advisory. That is different from bookkeeping. That is different from hiring somebody to just go ahead and categorize transactions in certain ways. That is like just a basic bookkeeping that doesn't provide you value. What provides you value is in the planning. Why? Because in the planning is where the value is. That's where the opportunities occur. Okay? If you come at the end, if you go to your accountant once a year, if you show up with them in their office in March or April and say, "Hey, here's my taxes. I want to pay a certain amount. Go ahead and file that." You are missing a ton of opportunities. I've seen it time and time again. And it's just it's a combination between a mentality and a perhaps fear of the unknown. And I say that because a lot of my clients, they come in, they think that the planning it doesn't apply to them because they're running their business is too small. They're so laser focused on their business. They see planning as a hurdle. as a something that is just basically going to lead them to nothing. And the ones that do go and they do their tax planning correctly, they're different. The only question that we get is, why didn't I do this sooner? Trust me, I've seen it all over the place. So who does this apply to? So if you're starting or expanding your business, if you're an individual buying real estate, or you're buying investments, or you're switching from a W-2, from a 1099, the tax planning is a must for you. That's a huge warning. You need to call your CPA right now. So, and why do I say that? Because like any one of these things, so you're either expanding your business, you're switching from you're buying real estate, you're buying investments. That is what we like to call a major tax consequence. So what that means is, if you're not on the right path in terms of choosing the right category of your business, if you're not on the right path of, let's say, maybe possibly setting up payroll for you, if you're not on the right path of making sure that your bookkeeping and your books are clean, this is going to be a huge problem for you. You're probably going to you're going to overpay taxes. You're going to pay possibly self-employment tax, which may not qualify for you. And all of these can be avoided by a simple tax planning. And it's a decision that you need to make right away. Don't wait till the end of the year, because then more problems are gonna be apparent for you. What? Why? Because it's what we said earlier. Playing catch up, it's a lot more expensive. It's a lot more effort than doing things the right way. So planning ahead, right? That's if you notice in all the 3 warnings, it comes with a lot of planning, of staying ahead of the game. That is key. In all my years, in all my experience, when you can get in front of an issue, especially with the IRS, you're saving money, you're saving headache, you're saving time, you're putting your business on the right track to whatever decision you want to do with your business. Because you could be in business for multiple reasons. You can be in it for the long term, where maybe you want to create a legacy for your kids. You want to leave the business to your kids so that they grow it one day. Or you can possibly just be, looking out for a short exit. Let's say you want to grow your business for a couple of years and then create enough value that you sell it for a profit. That could be it. But the key is that you plan accordingly, because whatever your exit strategy is gonna alter how you're gonna work out all of these categories. So if any of these 3 warnings are familiar, if any of these 3 warnings are for you, my recommendation to you is start planning. Contact a CPA right away. Your CPA should not be there just to do your taxes. Your CPA should be there to do your tax planning so that you don't overpay taxes. They should become your financial planner more than your tax preparer. So don't wait till it's too late. I'm gonna put the link on our bio so that you can possibly go to our website, book a consultation. We offer free consultations where you can go in and ask. We explain to you how we work. This is gonna be key for you. It's gonna save you time. It's gonna save you money, and it's gonna give you the best part, which is gonna be a peace of mind, and it's gonna save you a headache. Once again, thank you folks for joining, and I'll be happy to talk to you if you reach out to us on our website or by giving us a call. Thank you so much.